Good morning, everyone. Doing well? Had a pretty good weekend. I'm sorry it's a letdown. I know from International Talk Like a Pirate Day. Any talking like a pirate I do today will be completely unintentional, however. So that's just a caution for everyone. Um, so before we get started, a few announcements that I want to make sure that I make everyone aware of. So first and foremost, remember that a few weeks ago we had Meet the Firms, and several of you went to Meet the Firms. And if you did, you should have your extra credit recorded. If you did go to Meet the Firms and do not have your extra credit recorded, please let me know. If you did not attend Meet the Firms, the remaining opportunity for extra credit is going to be coming up this Thursday. It's the Career Expo that will take place over in the Student Union. I believe you can find details on it over at career.truman.edu. They should have the Career Expo information up there. From my knowledge, it takes place from late morning to early afternoon. I believe those are the hours. I don't remember the exact times. I'll try to give you a better update on Wednesday, but I did want to make sure that everybody had that on their calendar if they need to. Just as a reminder, if you did attend Meet the Firms and you want to attend the Career Expo, I can't give you extra credit for that, but you are more than welcome to attend both and still engage in that. Um, Also, this is I wanted to kind of update some things on schedule, make sure we're aware of. So first, I'm going to go ahead and share a minor update I made to the syllabus, which is not going to probably affect most of anybody in this class, but I wanted you to make aware of it. So I was looking at NetSuite for week 12. I know we're in week 6 and I'm already looking towards week 12. It's a pretty large assignment that I wanted to let everybody have the entire class session to work on. So I went ahead and I moved homework back to that Friday. So homework will be due on Friday during that week, and we'll be doing the entire class session on NetSuite, which means our final AI research discussion will be in week 11. But that should be sufficient for everything we'll know. And apparently I misspelled addressing as well in the syllabus, so who knew? Who knew? Anyway, as far as the next couple weeks goes, so we're on week 6 right now. We're going to do chapter 8 today. Chapter 8 homework will be due on Wednesday. We will also do our 4th NetSuite assignment. Now, there's an interesting point that I'll reiterate on our NetSuite assignment on Wednesday. That's going to start the purchasing process in NetSuite, which is pretty fortuitous, since we're going to be doing purchasing process today, so we'll be able to have some direct relevance. We're going to wait for about a month to do section 5. So that's going to be the second part of the purchasing process. I would strongly recommend that on Wednesday, when we do the purchasing process, you should take diligent notes and make sure that you have everything you need to follow up, because we're going to move into part 5 a month later. And I'm going to say, do you remember? And everybody's going to be like, no, we don't remember, Dr. Barnes. So you may want to make sure that you have all that information. Just for reference, part 4 will not be tested on the exam because it is part of the purchasing process, and I want to test those together. But NetSuite part 1, 2, and 3, those are all live for the exam. There's 2 multiple choice questions on NetSuite on the exam, just for reference. So yeah, we'll do that. We'll do homework at the Wednesday. We'll have our normal Excel in class and AR research discussion. We will wrap up our lectures for the first exam on Monday next week. Then we will have just homework next Wednesday. We're not going to do any NetSuite assignments, just going to be homework. It'll be a short class session, but that's going to lead us into the exam 1 review. I don't think anybody's ever had me for a class in this, ever had me for a course before. So a little bit of context for how I do exams. I have a full day review session that we go over the study guide and the practice exam. We will take the exam, and then we'll have a day that we'll review the results of the exam, and I'll talk through it and review that. So basically, every exam has got 3 dedicated days associated with it. That's pretty consistent for all of my classes. So we will be taking that seriously. I'm going to give you some more reminders as we get closer to it, but you can start looking at the study guide and the details for the exam already. It's posted on Brightspace. So if you want to start studying now, I would encourage you to do so. All right. With that, we're going to talk about chapter 8 today. So we're going to get started on that. So a little bit to note on chapter 8 is that chapter 8 is going to seem very, very familiar. It's going to seem very, very familiar because it's very similar to what we talked about in chapter 7. Chapter 7 was the revenue process, or the sales and collection process. Chapter 8 is the purchases and payments process, which I call the purchasing process. You may also hear me occasionally refer to as the procurement process. That's just a different term for purchasing, basically. It's a fancy term for purchasing, procurement. Regardless of the term that I use, it's the flip side. Now, think about it. from the Chapter 7 scenario. We're talking about our situation, and we were playing the role of Sunset Graphics. So everybody remember Sunset Graphics as our supplier back in Chapter 7? So as Sunset Graphics, we were the one that was providing services to customers. In other words, we were their vendor. Now, this is going to flip the script a little bit, and we are going to be the ones who are the customers, and we're going to purchasing from vendors. So the situation is going to be very, very similar. You just have to think about it as in the context of we're no longer the vendor, we're now the customer. And we're going to talk about it. What is the perspective that we take from that point? So the purchasing process should be somewhat familiar to you, not just because of what you already know from the revenue process, is that you should have some familiarity from your previous business courses about what it is that happens in the purchasing process. So we're going to talk about this at different levels. Let's start out talking about what the purchasing process is in general, and then we're going to talk about the steps of the purchasing process. So while revenues are the lifeblood of an organization, revenues can only be provided if necessary resources to provide them are available. All right. So this actually has some reference to things that we've talked about in previous courses. Does everybody remember back in accounting, your original accounting class, when you heard about the matching principle? I always said, I remember those words, Dr. Barnes. I remember the matching principle. I remember those three words being used together. No, don't ask me to define it. That's okay. I'm not going to ask you to define it. But the matching principle basically says is that expenses should be matched to the revenues in the period in which they occurred. Okay. So if you had expenses that were directly attributed to a particular source of revenues, you wanted to actually put the expenses in that period. So that was the idea of the matching principle. This is kind of consistent with that idea, is that you can generate revenues all you want, but unless you have products to help generate those revenues, most of those revenues are not going to come to fruition. Now, that's not necessarily true if we're not talking about a merchandising or manufacturing environment. You could say, I'm a service provider, Dr. Barnes. I'm the generation of the revenue. If you're in that situation, good for you, okay? That's ultimately what the dream is right there. I actually thought about this a long time. I've had some arguments with people about what is the best form of business to have where you don't have to provide any products and minimal amounts of service and just generate revenue. And the argument that people have made to me is that if you have like a parking lot in a big city, okay, like a place where people have to charge this, they have to charge them to park there in that spot. That's basically a minimal amount of resources. There's a massive upfront cost because you have to actually pay for that property, but you have minimum amount of resources and minimum amount of service. I argued that a campground would be actually better, that if you rented out a campground, that would be better simply because there's a lot less maintenance associated with that. I'm not sure which is the correct answer, but it's not going to be something I test on regardless. So what are we talking about when we talk about what resource provide? We're talking primarily about goods, inventory, facility, manufacturing equipment, and systems and equipment, as well as services, maintenance, janitorial services, and equipment and machinery repair. So these are all items that we can consider to be part of the purchasing process, not just inventory, but also items that we need to actually facilitate the processing of revenues or the generation of revenues. So it would be great if we could have inventory without the machinery that we needed to manufacturing the inventory, but we do know we have to maintain inventory, we have to maintain our facilities, have to make sure they're clean. So all of these things are things that we would consider as part of the purchasing process. Now, labor could also be viewed as the part of the purchasing process, but usually a separate functional area. And this is going to be very consistent with the idea of inventory as we talk about that as well too. I got to be honest right now. I'm looking at a sea of faces. I see a whole bunch of faces that are behind a computer screen and not paying attention to me. So if you are in that situation, if you're taking notes, congratulations. Thank you very much. I do appreciate that. If you're ignoring what I'm saying right now, the only reason I mention this is because I'm going to ask questions a little bit later on, and I was reviewing the lecture from last semester, and I asked a whole lot of questions and did not get many responses. So again, just as a reminder, please don't hide behind the computer screens as I'm talking here, unless you're taking notes. Again, I'm not trying to be critical of that if you're taking diligent notes in detail, but if you're focused on something else, please make sure you're paying attention. All right. So some very basic question. Big question. This is okay. So this is obviously me not paying attention because it should be very basic questions. All right. But what are the fundamental functions of the purchasing process? All right. Some pretty basic ones. Departmental organizational requests for goods and services. We need to know what it is we have to provide. Ordering requested goods and services. Once we know that we need it, there has to be an order for it. Okay. Then we receive the ordered goods, and the services are going to be received directly by the requesting party. Now, this is an important distinction. Okay. If we're talking about goods, those are usually going to be shipped to a warehouse or some sort of third facility to be delivered secondhand to our first hand to whatever party needs them. If it's services like, okay, janitorial services, we're not going to ship janitorial services to a warehouse. Those are going to go wherever the janitorial services are needed. Then we need authorization of payment on supplier invoices. Okay, so this is going to be something that's pretty intuitive in note, but we've got to authorize the payment for the invoices because we got to make sure we pay our suppliers in order to make sure they are happy and they're going to provide us with services and goods in the future. And then there's the subsequent payment. Okay, so I do want to make a note, this point here, the invoices themselves are going to be kind of assumed to be in here. Our diagram that we're going to look at for the BPMN diagram is not going to include the receipt of the invoice. There's assumption that an invoice will be received. That being said, even there's no receipt of an invoice, that does not absolve us of the responsibility of making payment to the suppliers. Okay, so we do have a responsibility even if there's no actual document received for that. So this is going to be something that we note here that's very consistent with what we talked about back in chapter 7 is going to be the transactions. Now, there's only 2 transactions, and these 2 transactions are, again, fairly intuitive because these are what you learned back in your financial accounting and managerial accounting classes. So purchases or inventory and a debit or credit to accounts payable. Now, quick note here, I'm not going to focus too heavily on journal entries. If I do ask you to replicate a journal entry, I don't care if you use purchase or inventory. Either one is fine. If you prefer perpetual accounting, you can say inventory. If you prefer periodic inventory, then you can use purchases. I'm not going to ask you to reconcile that. It's been a long time since I've taken financial accounting, so I'm not even sure that I could reconcile a periodic system. I probably could, but it's not something that I insist on knowing since I don't know it that clearly myself. But keep in mind that the debit depends on what is the inventory system, periodic or perpetual. And then that's going to be the generation of the payable. So we're going to talk about the recognition event for that. When you generate a payable, you've got to pay that payable. That's a responsibility you have as an organization. So accounts payable and purchase discounts and cash. Those are kind of the entries here. The 2 obvious ones are accounts payable and cash. We remove the accounts payable. We do that by sending out cash. But this purchase discount here, what does that seem to represent to everybody? So we talked about this during the revenue process, and it actually is in the slide up here. It says terms 2/10, net/30. Have we seen that? Yes, we saw that last week. When we pay within a certain period, and you'll notice it is within a 10-day window, we get a 2% discount. So it's $29.91. That is that 2% discount on purchase. So that's one of those things that vendors try to facilitate to make sure that there's timely payment on these invoices. And that's basically what we're taking advantage of here. Interesting question. So on the revenue side, we talked about sales discounts and allowances as being one item and cash discounts being a separate item. Should we recognize those as separate items from the purchase perspective? The answer is kind of, but think about it from this perspective. If I'm the buyer, do I care about what if there's a sales discount provided by my vendor? Am I going to recognize that discount in my transaction, or is that discount just exclusive to the person who's providing that discount? If it's a sales discount, that's going to be recognized by the person selling the item, but it's not going to be recognized by the person buying the item. You're just going to say, I bought this item for $14.95.50. That is the price that I know. I don't know if it's at a discount or not. Okay. And it's the same idea if you went and you bought something that's buy something on clearance or something that's being on sale at a store. Your credit card is not going to say, oh, okay, you bought that at a 50% discount. It's just going to say, no, you bought that for $15. And that is the price that we know. So the sales discounts and allowances does not have a corresponding alignment to the purchase transactions, but that cash discount does. That is the purchase discount that we're talking about right here. So interesting little feature that we have to note and makes sense when we think about it. All right, Sunset Graphics. We're back to Sunset Graphics. What is their purchasing process? So we've talked a little bit about this already, but let's go ahead and go into some more detail. So we're going to research prices and product availability. What is this aligned to in the revenue process? Is that the quote step that we were talking about before? When a customer sends us a quote, says, hey, how can you do for me on this deal? Can you tell me what the price is going to be? Kind of the same ideas that we're going to do research, not necessarily even a quote. If we have a supplier listing, but we know what the prices are, we could just obtain it from that. To select the best price and availability combination and send a purchase order to the supplier. So what was this document called what was this document called when we were talking about it from the revenue side? So the customer is going to send us their purchase order. Then we're going to generate something called a sales order in the revenue side. Those are not the same documents. They're distinct. Sales order is something we generate internally to recognize the customer sending us a purchase order. This is the customer generating a purchase order because we're now the customer, okay? The purchase order is saying, this is the goods and services I want to order. So we're going to actually send a purchase order to the supplier. And by the way, did anybody notice that I kind of swapped terminology here? That I was talking about vendors earlier and then I'm talking about suppliers. What's the difference between that? There is no difference. Vendors and suppliers are exactly the same thing. Those terms are used synonymously. And the only reason I bring that up is because that happens a lot in the book. They go from vendor to supplier, and I'll do that in the class, in the course too. I usually go with supplier, but I will occasionally say vendor. So send a purchase order to supplier. The supplier says, you're good to go. Here's the goods. They're going to ship them to us. And then once we receive those goods, or depending on what the terms of the shipment are, when the customer, when the supplier puts those on a truck, we're going to recognize the corresponding payable. So remember, we talked about this in the revenue process. We talked about this idea of freight on board destination versus freight on board shipping point. If it's freight on board shipping point, once the vendor ships them to us, that's when we recognize the payable. It's freight on board destination. They have to arrive at our warehouse before we recognize the payable. That's, again, kind of consistent with what we've already learned. But what does the transaction look like? That's this transaction right here, okay? Once we have actually acknowledged that we have responsibility for those goods, we put that inventory into our books, either as purchases or inventory, and we generate the payable. Now, you will notice there's a small item that's missing here that we probably should include, okay? So a small item that's included here, should include here, is the receipt of the invoice. And that was one of those things that I said that was kind of given that we would receive an invoice because we have to make payment on that. But if that's the case, the receipt of the invoice takes place, and then we pay the supplier according to the credit terms. And so that's going to be the payments that takes that takes place at the end there. Now, we needed to know that in order to be able to create our diagrams. We needed to know the system and the processes that are occurring here. Again, nothing too complex here, but we need to have this in order to be able to detail it out. So let's move on to our activity diagram, which, remember, our activity diagrams for this course are BPMN diagrams. So what's going to be listed here? This is probably the easiest diagram that you're going to have the entire semester. I don't know. There's also a pretty easy one in the inventory process. This is our basic BPMN diagram. Now, we have a very similar one to this for the revenue process, and this is simpler than the revenue process. This is your replication diagram, by the way. This is the one that I would expect you to be able to replicate on the exam. Okay. What are we talking about here? We're talking about an inception event. That's the need to replenish inventory. We identify, all right, we do not have enough inventory for manufacturing or for sales, whatever it needs to be, or we need a piece of equipment, we need a piece of machinery, we need some sort of asset or some sort of service in order to be able to maintain our business. So we've identified a need for a purchase. So this is what triggers this. What is this actual event? That's where we start researching prices and product availability. That's that triggering event right there. Once we've established what it is that we're going to buy, we issue the purchase order to the supplier. All right, that's our first activity, issuing that purchase order. We know that assuming the supplier says everything is good, that they approve us for credit, they're going to send us the goods. They're going to send us the inventory. So receive products. And then this is our recognition step. That was where we record that journal entry for purchases / inventory as a debit, accounts payable as a credit. That is our recognition event of the payable. Now, again, this is contingent on what is the freight on board terms, okay? Freight on board shipping point versus freight on board destination. Will I test you on that? We talked about it in the revenue, so it's a possibility I may test you on that. So you do need to know the distinction between that. So if I say freight on board shipping point, we recognize it immediately once it leaves the customer or the vendor's warehouse. Once it gets on that truck, it's our responsibility as the customer. If it's freight on board destination, we don't recognize it until it comes to our warehouse. All right. So a little bit of a distinction from how we talked about in the revenue process. There is probably an activity that we could include here. In past years, I've actually modified this diagram to include it, but because it's not included in our narrative, I decided not to include it in this activity. What occurs right in between receiving products and sending payment? AIS class. AIS class takes place in between this right here. So this is where we're at right now. We're at AIS. What occurs between receiving products and sending payment? It starts with the letter I. The last 5 letters are the name of a TV show where people sing. It rhymes with invoice. Okay, it's the invoice, the receiving of the invoice right there. Remember I was talking about my last semester, I was having a lot of hard. This is kind of the response I was getting last semester. Yeah, receiving that invoice. We can include that as an activity here, and if you include that activity in your diagram, that would be perfectly fine. But What happens if we don't receive the invoice? Are we absolved of sending payments? Well, they didn't send us a bill, so we don't know anything. Wouldn't that be nice if that's the way things worked? Unfortunately, that's not the way things work. We don't have responsibility for a bill. We still have responsibility because we recorded that payable. We know we owe money, so we're going to send payment at some point. Sometimes we may send it at 10 days because we want to get that 2% discount. Sometimes we might send it in 30 days because that's just a net 30 terms. Regardless of when we send it, that's when we make the payment. That's when we recognize this recording the cash disbursement, which is awfully nice of them to actually acknowledge this in this diagram. Remember the revenues diagram that we had to add that ourselves? It was not actually, we didn't have the cash receipt recognition point. So what is this one right here? That's where we record the cash disbursement. That's this step right here, recognizing the payment of cash. By the way, terms are different, okay? Cash receipt implies we receive cash, okay? Cash disbursement implies we give away cash, we disperse cash, all right? So those two terms are not synonymous, they are different, okay? It's important to recognize those because those do represent different events. All right, so replication model, but we do have more models that we can talk about. These are going to be ones that you do need to be able to interpret. The good news is that we don't have a lot new to learn. We don't have a lot new to learn. Why? Because we learned most of it in the revenue process. In fact, you're going to look at one diagram and you're going to say, Dr. Barnes, that looks really, really similar to what we did for the revenue process. And I'm going to admit, I completely and totally took the one from the revenue process and just changed it a little bit, okay? Why did I do that? Well, this is what it says in the book as the basic supplier interaction model. This is the diagram. Now, is anybody satisfied by this diagram right here? Some of you may be like, well, it's really simple, okay? It's missing in this BPMN diagram. There's no activities whatsoever. There's no activities whatsoever. Now, what the book says about this, the reason they justify this is they say, well, as the customer, we don't really care what the supplier activities are. We just want to recognize the communications between the supplier. And I say that is complete and total, well, you know. All right. I'm not happy with that. So what I did is I took this diagram right here and it says, this is Dr. Barnes' revision. This is an interpretation diagram. Before you start howling and saying, that's a lot to remember, Dr. Barnes, I'm going to say, this is the exact diagram I gave you for the revenue process. The only thing that's changed is that I changed this from sunset to being, this was a customer up here, and this was sunset down here. Now sunset's up here and the supplier's down here. It is the exact same diagram in all other respects. So what we learned in the revenue process is going to be the same for the purchasing process. So the good news is you only have to interpret one diagram. You don't have to interpret two separate diagrams. You just have to know if I'm the supplier or if I'm the vendor as sunset. Am I the supplier or the vendor? Well, actually, it's the same thing. Am I the supplier or the customer? That's what I meant to say, supplier or the customer. All right. If you're the customer, then you're on the top. If you're the vendor, then you're down here at the bottom. All right. So that's the basic interpretation. Let's go ahead and look at one more BPN diagram because why not? Okay. So this is supplier interaction. This is a little bit more distinct one. So is it safe to say that when we receive our goods that we're always going to be satisfied? We're just going to say these goods are fantastic and we have no problem whatsoever. Let's go ahead and pay the vendor. Has that happened to you at every scenario that you've received exactly what you ordered? Has anybody ever ordered a pizza and gotten the wrong toppings on their pizza? Yes, isn't that frustrating? Yes. And so if that's the case, you may call back and say, I did not order. I know I've used that example in this class before, but I am trying to facilitate the discussion here. So what happens in that case? You said the pizza and they say, oh, okay, we sent the wrong pizza or we delivered another customer's pizza. That's a really frustrating one when somebody delivers another customer's pizza, because not only do you know that you got the wrong pizza, but somebody else got the wrong pizza too. It was just kind of a swap. So they have to remake both pizzas. So what happens in the situation where you're talking about non-perishable goods? If you receive the wrong goods, or if you receive goods that were not up to the quality standards you want, or you can't keep the goods for whatever reason, you're going to send them back, okay? So you're going to assess the items, and that leads to a decision point. Now notice we have a gateway here. We do not have a closing gateway, which does make me a little bit sad, but it does actually view the important points here. So if we're not happy with the items, we're going to send back, and if we send back the goods, we send back the goods to our vendor, do we owe money for those goods anymore? No, we cancel the payable. All right. So we've got a decision closing gateway right here. It's basically saying, all right, you're done. There were no goods exchanged in this particular scenario because you sent them back. If you do accept those goods, you place them in inventory, and that at some point in the future, you pay the supplier. Now here's a clock here. We talked about this clock, this little symbol. It was back when we talked about UML diagrams. That was one of those symbols on the extra slide that I gave you. What does it seem to represent to you all? It says that time is important, Dr. Barnes. Time judges all things. And you're not wrong, but I'm not talking philosophically. What does this clock symbol mean? Is there a separation in time between when you receive the goods and when you actually pay for them? Yeah, and that's what this is representing. So this is a little bit more complex, but it is intuitively sensible. It does make sense. I use that word a lot, intuitively sensible, or intuitive. And so basically the description here is trying to say we place it in inventory and at some point in the future we pay the supplier, which is just kind of an extension of this diagram right here. We receive the products and then in the future we pay the supplier. So we could actually include the clock in this diagram here, though it's not necessary to do so for your purposes. But yeah, interpretation of this, pretty important. And I think this is a more accurate diagram, though definitely a lot more complex as far as the nuances that are going in here. Again, this is an interpretation diagram. When I put this on the exam, all I'm going to ask you to do is to interpret what the diagram is saying. All right, that's BPMN. It wouldn't be wonderful if we stopped there because then we've had no UML diagrams whatsoever. Unfortunately, we're not that lucky. We're not that lucky. So let's go ahead and talk about the UML diagram. So first of all, we need to have a summary of the purchase and process payment, or process and purchase payment process. Purchase and it says process and payment summary. It should say purchase and payment summary. Purchase and payment process. That's why I'm getting confused. A sunset employee selects a supplier and issues a purchase order. So a purchase order is a promise to purchase from a supplier which specifies the prices and quantity ordered. All right, pretty straightforward. Supplier sends the products to sunset. Products are received by a sunset employee, which triggers a recognition event. That's our first transaction on those journal entries. Okay, it's the first transaction, the one that I reiterated. Again, transaction event or event recognition, really, really important for these diagrams. All right, so important to note. And when payment is due, an employee pays the supplier, which is our second transaction. So in order to create a UML diagram out of this, we need to know what are the items we have to include in the UML diagram. Okay, they're called entities. Those are our three primary ones. We have the fourth one. What is that fourth one? That fourth class that's not an entity called? Yeah, conceptual structure. Okay, so we're going to ignore the conceptual structures right now. Let's talk about our entities. So our entities that we could mention is that we could have resources, events, and agents. Let's deal with the easy ones first. Okay, resources. We're talking about resources. What would be some example of resources that we can include in there? There's actually quite a few of them, but we're going to try to keep this as simplified as possible. So if you're making purchases, what is this most likely purchasing for? When you go to the grocery store, what do you purchase? Purchase conversation from the store workers. You say I'm really, really excited about talking to you about that. No, you buy groceries. So we're talking about inventory. We're talking about products, okay? Some sort of products that are purchased. What do you purchase with? Cash. Yeah, that's right. Money. Okay. Yeah, cash. Moolah. Don't put moolah in the UML diagrams, please. Okay. I can't count it wrong, but it will make me frown. Okay, it will make me frown. All right. So okay, I'm permitted to put moolah on there. That's going to make Dr. Barnes pay attention. Yeah. All right. So actually, my grader will probably be grading that. So if you put moolah on there, he's going to come to me and he's going to say, "Is this right?" I'm going to say, "Yes, it's fine." Yeah. All right. So yeah, cash and products are two resources. What about our agents? Okay, what did we just talk about? What is the name of the agent that we're buying stuff from? Supplier or vendor? Okay, either one is fine. And who is handling those purchases? Employees in the organization. Good. All right. Now the events; those are the challenging ones. Those are the particularly difficult ones. So can we say the issuance of a purchase order represents an event? Yes. Okay. Yes. All right. Can we say that the disbursement of cash at the end there represents an event? All right. So those are two definite events. Could we also say that there could be purchasing step in the middle that kind of represents the amalgamation of those two, the combination of those two, I guess I should say? Technically, yes, we could say that that's a process because you could have a purchase order without a purchase. Okay, that purchase order could be denied. But for the most part, we assume that anytime there's a purchase order generated, there's going to be a purchase. Now, we're going to talk about why that's important here in just a second. But for the first diagram, we're going to include three events: a purchase order, a purchase, and a cash disbursement. And the reason that purchase is included is because we're assuming that not every purchase order requires a purchase. So let's go ahead and look at our replication diagram. There's our UML diagram. Now, this one's a lot more confusing than the revenue diagram because of the addition of purchases right here. So we have to talk about purchase orders that was a request for goods. A purchase order may or may not necessarily result in a purchase. So we need to actually include the purchases as a separate event. And then cash disbursements when we actually have to pay for those purchases because of the separation and timing. Now, the good news is this does not substantially differ from a revenue diagram. The one thing you do have to pay close attention to is that we can find that, so the resources are identical. The agents are very close. We've got employees, and instead of customers, we've got suppliers. Where we have a differ is that, remember back in the revenue process, we started with quotes, then we had the order, and then we had the cash receipts. These are very close, but they're not the same. We have the purchase order, where it's our request. If the purchase order is fulfilled, we have a purchase. And then when a purchase takes place, then we have a cash disbursement. By the way, for this diagram, you do need to have associations between purchase order and purchases cash disbursements, simply because the definition of purchases in this context requires that there be a purchase order and a subsequent cash disbursement. Now, there's a little bit of definition here. I did not go through each of these slides and say that we're going to have to define multiplicities, because, you know, if I really wanted to go through tedium, that's the way to go through. I think for the homework, you'll probably have to do some more multiplicity work, but that's okay. Okay, more reinforcement's good. So at this point, I'm assuming that we can actually interpret the multiplicities, and we're going to talk about that in the next diagram, because I want to talk about some of the nuances of some of the multiplicities. So we're going to talk about this. This is our replication diagram. If I ask you to replicate a diagram for the purchasing process, this is the one I'm looking at. And the question comes up, would we have to include all three events? The answer is yes. Okay, all three events. But is it possible that a company could have a policy that a purchase order will always result in a purchase? Okay, a purchase order, because they will not acknowledge the purchase order if there's no purchase. They'll basically say no purchase order was issued. Okay, is that a possibility? Yes. If that's the case, then we could simplify this diagram by eliminating the purchase event. Also, what was that fourth class that we talked about that I said is not in the replication diagram, but you need to know? Conceptual structures. Could we include a conceptual structure in here, or two? Yes, and these are going to be similar to the ones that we talked about back in the revenue process. So we still have our product categories, which are managed by our employees. This is the same one that we talked about in the revenue process. And we can also put our suppliers into supplier categories. So we have supplier for janitorial services. We have supplier for raw materials. We have suppliers for machinery repair. Things along those lines. We can have categories for those. So conceptual structure. Now, again, this diagram, I actually really like this diagram for the simplification of the removal of purchases, because I think that makes things much easier to interpret. But because this is our base diagram, this is the ones you have to know, all right? And you have to know the associations, the multiplicities, so on and so forth. Now, I do want to talk real quickly about this interpretation. So this is just a challenge for you all to see if you can interpret what's going on here. So multiplicity interpretation, by this point, you should be somewhat familiar with it. We've done it for 2 chapters. Let's look at this right down here. Actually, I want to talk really quickly about this one right here. This is just a reinforcement of what we learned back in the revenue process. So we have a 0 to many multiplicity here. So that's actually representing cash, okay? So we can say cash disbursements can occur or cash accounts can have 0 cash disbursements or many cash disbursements. Is it possible that we can have a cash account that we never disperse cash from, that we just is responsible for collections or accumulation of some type? Yeah, okay. So that's what this multiplicity is trying to say, is that certain cash accounts we can never have a cash disbursement to, but most cash accounts, we're going to have multiple disbursements from them, okay? So that was the same thing for the receipts. Some cash accounts will never have receipts, but we'll have disbursements, which again, is kind of non-intuitive, because you would say, how would you ever have cash in that cash account if there's no cash receipts? And the answer is probably there's going to be some replenishment. It's just not necessarily cash receipts from the revenue process. This one's a little bit more dicey. So interesting story. The reason why I want to talk about this is because on earlier versions of this particular slide, the previous edition of the book, they actually had the associations here for the conceptual structures. They did not have the multiplicities, which I thought was really problematic. So I did my own multiplicities, and then this new one here says that this is a 1-to-1 multiplicity. Now, what does this interpret as? What does this interpret as? Suppliers belong to one and only one supplier category. Is that a safe interpretation of this multiplicity? Is that what you would interpret? Like, let's say if this multiplicity was missing, is that how you would interpret this relationship? In other words, could I have suppliers that belong to more than one category? So I believe that's the case. I believe that I could have suppliers that belong to multiple categories. So is it fair to say that 1-to-1 is an appropriate association or appropriate multiplicity? Probably should be 1-to-many. Okay. So this is one of those scenarios that you can actually have multiplicity interpretations for a particular situation. Multiplicities are variable. Again, on the exam, as long as you can effectively explain a multiplicity is all I'm looking for. I'm not looking for the quote unquote correct answer. Now, if you say many to many, that's probably not going to be correct, because there's very rare situations that a minimum is going to be many. Or if you say 0 to 0, that's not going to be correct. But pretty much any of that range, as long as you provide interpretation for that. So that's a little bit of leeway or a little bit off your back. Again, it has to make sense. Okay. On this one, I could say 0 to 1. Okay. Suppliers belong to 0 supply categories. I would say that probably couldn't be correct because every supplier needs to belong to a supplier category. So 1 to 1 or 1 to many, both are valid interpretations for this multiplicity. All right, this is our interpretation diagram. This is not one that you would have to replicate for the exam, but you would have to be able to interpret for the exam if I provided that to you. So we now have two UML diagrams for two separate business processes. Now, this is kind of an interesting question. Are these processes at all related? Can we say that purchasing and revenue have any kind of relationship whatsoever? I would say that there's probably a pretty close relationship there. So is it possible that I could take these two diagrams, the one from the revenue process and the one from the purchasing process, and combine them somehow? I know what you're thinking. You say the answer has got to be no, Dr. Barnes, because I can't deal with that diagram. And I'm sorry, I've got bad news for you. Yes, it can. Okay. We do have that diagram. So this is an interesting point because we've taken some common elements, some common resources, events, and agents, so common entities, and we've merged them together. So products are common between our two process areas. Cash is common between our two process areas, and employees are common between our two process areas. So why not just create a diagram that includes all three of those as one item instead of separate items across two diagrams? You'll notice the events and external agents are process specific. So that's saying purchases, cash disbursements, suppliers, this is common to the purchasing process. Cash receipts, sales, and customers, this is common to the revenues process. So this is interesting. This is kind of fascinating to look at. But the good news is you don't need to worry too much about this right now. How many people are asking what the bad news is? You're just waiting. It's like, what's the good? You told us the good news is, Dr. Barnes. What's the bad news? The bad news is we still have one more process area. Is it possible that we can shoehorn that process area into this diagram? The answer is definitely yes. Okay. Now, I do want to let you know that we're going to look at a very, very large UML diagram that's going to contain all three processes. You absolutely do not need to be able to replicate that for the exam. I've had students who replicated it for the exam before, and it was very impressive, but you won't get extra credit by actually replicating the full diagram, okay? We'll see the full UML diagram next week when we do the inventory process. Suffice to say, it is a monster, okay? There's a lot going on in that diagram, which is why I keep that at interpretation level only. But this is fascinating. I actually really like this. It's kind of an interesting combination between the two. All right. To wrap up, I want to talk a little bit about controls. And if you remember when we talked about this last week, I got to controls and then we ran out of time. So I'm going to backtrack a little bit on the revenue process and go back to the slides that we talked about in revenue. At least I think I am. Thought I had them open. Okay, maybe not. Oh, yeah. Okay. So I'm going to go to the revenue slides we were talking about before. So just as a quick note, I'm just going to do a quick review of what we talked about before, is that we're starting to talk about internal controls at the process level. And that was extending upon our discussion of business rules from chapter 5, okay? From chapter 5. I think I said chapter 3 before, but it's actually chapter 5. Chapter 5. And these are examples of internal controls. By the way, does anybody remember what this CAR stands for? CAR, it stands for car. Yeah, it's a car. Yeah, car. So custody, authorization, and recording. Custody of assets, authorization of transaction, recording of transactions. Why is that important? It's my favorite thing to talk about, or at least one of my favorite things to talk about. It's called segregation of duties. There are 3 responsibility areas that have to be separated out in a responsibility area or process area. If those 3 responsibility areas are not separated out, then we could have violations of controls. So yeah, when you see that car, then custody, authorization, recording. Now, one of the things that we made a delineation on, this is just a review, okay? We talked about this idea of controls and IT systems being either access controls or application controls. So anybody remember that discussion from last week? So when we talk about access controls, we're talking about limiting who can access information, access an information system, and the areas of information system accessible to each user. So again, you walked in, you sat down, you got on your computer, you logged in. Was there an access control? Yes. You required your username and your password in order to be able to log in, or at least a valid username and the password associated with that account. Be kind of weird if everybody had the same password. Just remembering NetSuite again. But yeah, everybody's got the same, or everybody's got different passwords and they got their unique identifier that they use for that. Now, application controls, this is going to be a process that going to be providing a data trail and actually provides detail for data integrity. Basically, it tracks the activity that you're performing on a computer. All right. So let's talk a little bit about some of the types of things that we talk about with respect to data integrity. So what are some application controls or some controls that actually make sure that we have control or we have strong application controls within a system? One is going to be field checks, okay? Field checks are to ensure that each entry is the correct data type, such as numbers or dates. So has anybody ever entered an Excel spreadsheet, entered something like a sequence of numbers and then a series of letters below that? And then you get that little green flag and says this field type is not the same as previous field types. Kind of shows you that warning. Excel doesn't have a restriction on that, but other database programs will have a restriction. If it says that this field type has to be a numeric field type, it will tell you you cannot input letters. Okay, that's an example of a field check. And then same thing for validity checks. A validity check will accept the values. Usually this is going to be predetermined, so drop-down lists or calendars to select dates. So you have to specify within a certain list of parameters, a certain list of values. And then limited range checks, these are a little bit more open-ended. These are basically saying that a value has to fall within a certain range. Now, why might we have a limit or range check? Let's say that you as a salesperson are only authorized to conduct sales in, up to $1,500 without approval. So you have a big customer that wants to buy $10,000 worth of merchandise and you want to conduct that transaction. What is going to be required? When you put that $10,000 sale in, it's going to say must have supervisor approval, so supervisor authorization. It's kind of a bummer, right? That's going to prevent you from immediately getting that $10,000 sale. Why is your company want you to have approval for that transaction? So that you're not just making up transactions to boost your sales totals. Say, yes, I'm sending it to completely and totally real customer.com. Yes, that's the name of the people that I'm sending to. They're definitely not a fictitious vendor that I'm using to boost my sales figures. A fictitious customer I'm using to be able to boost my sales figures. So that's why we have a limited range checks to make sure that they're within a certain value. And if they fall outside of that value, they create some sort of exception, which is going to be usually a protocol that has to be overwritten. Now, let's talk really quickly about this. This is something that I only recently started talking about, but actually refers to something I talked about on Friday. Remember, I was doing my Talk Like a Pirate stuff on Friday, and I talked about IT access controls. And I said IT access controls are primarily blank in nature. Does anybody remember that word that I used? The word that I used was preventive. We talked a little bit about this with respect to controls. We said that controls tend to be either preventive or detective and corrective in nature. Now, what does that mean? That seems like just like some confusing words. So if we think about controls, remember my original control, my stupid example, okay? My stupid example that I used back at the beginning of the class, we talked about this and I said, I have a control of putting shoes on my feet before I go outside to check the mail. Is that control trying to prevent me from getting into harm, or is it trying to detect when harm occurs and correct the problem? This is an easy question, by the way. Is my control of putting shoes on my feet trying to prevent my feet from getting injured, or is it trying to detect when my feet get injured and correct the problem? I've got these self-healing shoes that I wear, okay? And whenever I get an injury in my foot, it just basically goes into more. These are like $1,000 shoes that I bought off some big website. Is that what shoes are supposed to do? No, they're supposed to prevent problems from occurring, okay? So when we say a control is preventive, we're saying we don't want a problem to occur in the first place. Now, controls can be either preventive or detective and corrective. Detective and corrective is just exactly what I was talking about. If a problem occurs, it identifies the problem and then tries to fix the problem. So that's going to be the important case. Is the important distinction to note is that we have two different categories of control. Now, let's go back to our access and application controls. So our access controls basically say that this is limited who can access the system. Would you categorize this type of control as primarily preventive or detective and corrective? So there's a username and password that you have to enter in your computer. Is that trying to prevent bad people from accessing the system, or is that trying to detect and correct it that somebody does? Trying to prevent it, okay, from the first place. Now, you have an application control, which is tracking your activity. Is this trying to prevent something from happening or trying to detect if something happens and fix it subsequently? It's detective and corrective and application control. Now, this is not 100% true. I'm not going to say every single access control is preventive. I'm not going to say every single application control is detective and corrective. But primarily speaking, when we think about access controls and application controls, most access controls are going to be preventive in nature, like the pirate said, okay? That pirate from Friday was me, all right? When we talk about application controls, these are primarily detective, trying to detect a problem if it occurs, and then corrective, trying to fix the problem after it takes place, which is an important distinction to make. Now we're going to talk about the nature of prevention and detection, but it's important to note that it's really, really hard for any organization to rely on just one set of type of controls. As much as we would love for every control to be preventive, we'd never want problems to occur in the first place. The fact is, we're human beings. We create problems by our very nature, okay? So sometimes we have to detect, we have to find and fix the problems, which is why we have detective and corrective controls. All right. So in chapter 7-11, it actually talked about this table right here. Now, I'm not going to go through this whole table, okay, or exhibit 7-11. So it's on page 291. I'm not going to talk about this entire table, but I definitely recommend that you look at this before the exam because there's a lot of examples of different types of internal controls and how they work. But I want to talk about the intuition behind this, okay, because I think that this is an important distinction that we actually make you understand how the controls work. So we have a business rule here that's being created, okay? The idea is that we want to make sure that quotes are promptly provided, that every quote, employee must provide one quote within business day of request, and manager must approve of quotes for $5,000. That's a business rule. That's an obligatory business rule. It doesn't characterize that saying employee authorization or authority action. That's basically business rule in action right there. So it says that we've got both an access control and an application control in this area. So employee preparing quotes cannot modify established products and service prices. So it's trying to prevent a problem from occurring. This sounds really familiar, by the way. An employee cannot do one thing, or employee doing one thing in one area cannot do another thing in another area. I just talked about this as my favorite type of control. What was that called? Yeah, that's what I thought. All right. So segregation of duties. This is a segregation of duties control, okay? So employee preparing quotes, somebody's recording the transaction, cannot modify existing products and service prices, cannot authorize changes in prices. So somebody recording a transaction cannot authorize transactions or authorize system changes. So this is an example of that separation of responsibilities I was talking about. And then application control, the system must provide the quote number, a number control, default values, value limit checks, and create audit trail. Basically tracking the activity. So if there's a problem, it gets flagged and we fix the problem. So that's going to be an example of the type of item where we see a business rule and the appropriate access and application control created out of that. Now that was last week. Let's go ahead and move on to this week because we do have another example of this. So another example, manager approval for orders greater than $5,000. Employee ordering products must not manage inventory. So again, obligatory business rules. So access control, employee preparing purchase orders cannot modify product inventory records, receive items, or pay suppliers. Okay. So that sounds like somebody in one responsibility area cannot have something in another responsibility area. What did I call that again? Segregation of duties. Everybody's going to know this really by heart because I'm going to ask you this like multiple times and you're going to be like, oh, I'm so sick. Get rid of the car. Okay. Yes. It's custody authorization recording, separation out. So we're talking about somebody who's recording the transactions cannot authorize or have custody of this. So it actually talks about all three of these. So this is a recording step. Modifying product inventory records is an authorization step, as well as pay as suppliers, and receiving items is a custody of assets step. So it's separating out all these responsibility areas in this area. And then finally, application control. System must provide purchase order number control, default value, range, limit checks, and create an audit trail. That sounds like the publisher just did exactly what I did. They just copied what they did from the previous chapter and they put it, but it's appropriate. Okay, it's appropriate here. So we're actually creating the system to make sure that we can identify when a problem occurs and fix the problem. So just as a recap, okay, with respect to controls, we have access and application controls. Access controls are primarily preventive in nature, which means that we're trying to prevent a problem from occurring in the first place. Application controls tend to be more detective and corrective in nature, which means we try to find the problem and we try to fix the problem. If you can remember that, then everything else that comes after that, regardless of the process area, is fairly straightforward. You can identify these without too much difficulty. However, I would encourage you to go back and look at these tables, 7-11 and 7.11 and exhibit 7.11 and exhibit 8.6 for some example of these to reinforce these concepts because they are important concepts in this chapter. All right, next week on Wednesday, as well as homework. I'll see you all then.